You may be surprised to have a real estate agent say this, but the trick in buying a home is not actually finding the home, it's finding the loan. Okay, there are going to be 4 criteria in qualifying for a mortgage. The first is your debt-to-income ratio. The second is your lump sum in savings, and that's going to be for your down payment and closing costs. The third is your credit score, and the fourth is your credit history, which is a little different than the score. Okay, so let's start off with the debt-to-income ratio. If you were loaning money to someone, you'd really want to know that they had the ability to pay you back. And obviously the bank that's going to give you a mortgage is looking for the same thing. And so what they're going to do is work through a little formula pertaining to your debt and your income. First thing they'll do is take your monthly gross income. That's your money before taxes are taken out. And they realize that you have to live and eat and pay for your utilities and things like that. So they will cut off about half of your income and count it towards just living expenses. So it's your gross monthly income multiplied by 45%. Those ratios change, but that's a good rule of thumb. And that leaves you with your money that you can use to pay debts with. Then what they'll do is they'll subtract out your other debt. So people you already owe money to, they know that those have to be paid, so they'll take that away from you as well. And what's left over at that point, after multiplying your income by 45%, and then subtracting out your debt, what's left over is the amount that you could pay each month for your mortgage payment. And they'll want to know what that is, and we've got to find you a house that's the monthly payment on that does not exceed that number. The second issue that the banks are going to look at is your down payment and your closing costs. And over the years, that's changed quite a bit. At one point, getting 0% down was pretty easy. And that's changed quite a bit. Right now, the typical is 3.5% down because that's what FHA requires. Conventional lending is typically about 10%. If you can qualify for a rural development area, then you don't have to put anything down. But most of the loans that I'm working through right now are FHA loans at about 3.5%. You'll also have your closing costs. Your closing costs are going to be above and beyond what you're paying for the house. That'll be things like your loan origination, your title fees, and your escrows. And we can talk more about that in detail. But just know that that's typically going to be somewhere in the ballpark of 2.5% to maybe 3% of your loan. And again, that's different from the down payment. You'll have to come up with cash for both of those issues, your down payment and your closing costs. And there's a lot of ways to do that. The down payment is going to be set. You're not going to be able to get the seller to help you out with that one on most loans. But you can typically get the closing costs written into the contract so that the seller will actually pay you for those costs. Probably the biggest issue, the one that the most people have troubles with, is this one, and that's the credit score. And that's the primary reason the HELP program was developed, is to include a credit restoration component to the real estate process. And this is something that we're very experienced with. You're typically starting somewhere lower than what's needed, and we've got to do some things to get you up to what is needed. Right now, and this number will change, but right now that magic number is a 620. You need to have a 620 credit score minimum for most loan programs. Think of it like your own physical health. If you're feeling unhealthy, you probably need to cut some bad things out of your lifestyle and add some good things in. And that's exactly how credit works. We're going to help you build some good trade lines in. Those would be things like little prepaid credit cards or some lines of credit. We don't want you to run up a big debt, but we do need you to have some active, open, healthy lines, or you'll have no score at all. The second issue is getting rid of some of the bad stuff. That would be collections. Obviously, liens and judgments will have to be taken care of. Bad debt that's perhaps been written off. we will take the time to write to the different credit bureaus and to try and get those things removed if we can do so. We're not in the business of getting rid of legitimate debt, so we can clean out a lot of bad reported material just by kind of scrubbing them and going through and talking to the different bureaus. End result is, over time, with the addition of some good lines and the removal of some old dead collections, we can usually get some pretty good improvement in your score over a period of maybe 4 to 12 months. So the last of the 4 issues is the credit history. That's a little bit different than your score. You can still have a pretty good score, but still be blocked from getting a loan due to a history issue. History issue would be something like foreclosure or a bankruptcy, something that's happened not too long ago, and most of the mortgage companies will kind of keep you in a penalty box, so to speak, for at least a couple of years. And that number changes all the time. Right now you'd be blocked for 3 to 5 years for foreclosure. Short sales will also block you for between 2 and 3 years. Those numbers will change though, and so perhaps down the road it'll become easier. If you're self-employed, you'll have to show at least 2 years worth of history. You'll also need to make sure you've paid all liens or judgments. Even if they're very, very small, one of the ways that the system blocks you from moving forward is you cannot transfer title in or out of your name of a piece of property without having a clean judgment history. That will block you for sure, and there's just no getting around those. That cannot be cleaned up through credit restoration. You'll just plain have to pay those off. And most lenders will also require 12 months worth of clean rent history as well. Okay, so that's our list, and it's my job to help you come up with a strategy or a plan to address each of those 4 issues. Ideally, all 4 of those criteria will be right in line and we can just go out and shop for a house immediately. But if not, we can still help.